Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the September 7th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. We'll call this the Kickoff Classic edition of Basis Loaded as the NFL gets underway this evening. What better way to celebrate than with the latest from the most recent NDPSR report, starting with butter. This butter number coming in at 267.65 represents a -3 to the 1 week average of 270.20. Now, you'll notice that the NDPSR dropped 2 cents from the prior week, from that August 26th number. The CME weekly averages dropped 2 cents as well. So the NDPSR is tracking step for step with the CME, albeit at a lower than expected basis. We keep saying that lower than expected basis is attributed to all the volume that we're trading at the CME. You'll remember that last week we traded 44 loads at the CME, 70 loads the week prior to that, 98 loads 2 weeks prior. So a lot of volume at the CME, that volume not really translating here to the NDPSR. Now, granted, those sales at the CME, if they come from the manufacturer, they should be reported here. But the volume at the CME has been so massive that you would expect to see a big bulge in the volume snake on the NDPSR. And you'll notice that August 19th number, as well as the August 26th number, well above our expected 3.5 million pounds. However, nowhere close to where we should be if all contracted sales took place and you add in the volume at the CME. Should have been north of 5 to even 6 million on both weeks. Last week, 44 loads traded at the CME. That's a big chunk of weight. Volume on the NDPSR just moderately above our expected 3.5 million pounds. So I would have to say in butter, the report card is disappointing volume with a disappointing basis. Up next is cheese, blocks, $2 even, 94/100ths. Call it, for our purposes here, 201. That represents a -1.5 to the CME 1 week average of 201.50. Now that 201.50 was the high week at the CME, so you would expect lower than normal basis. This basis a little bit even below that. However, it did get above the $2 level, which would be surprising to see. So a little bit lower than normal basis at the high end of the range. That certainly doesn't stand out as anything crazy. We traded 3 loads on the CME last week. So after a pretty quick move higher on limited volume, after trading a lot of volume on lows, up here at the highs, the volume continues to remain limited. However, prices have been sticky, hanging out around that high 90s level. What is disappointing as it goes with the cheese complex is this sales volume. This week's sales volume at 9.7 million pounds is about 3 million pounds under our expected 12.5 million. And you'll notice that for the last month, we've been running anywhere from, we'll call it 1 to 3 million under per week. So the end user has not adjusted to this new price at the CME, and demand has been lackluster. In the barrel, the story remains similar, 185.34. That represents a +4.5 to the CME 2 week average of 180.90. So +4.5 is kind of at the low end of our expected range. However, the barrel was able to generate close to normal basis. But similar to the blocks, barrel volume continues to struggle. This is now 5 weeks in a row where we have failed to reach the 13.5 million pound threshold, with this week's volume at 4.5 over, falling about 1.3 million pounds short. So over the last month, these NDPSR sales volumes have missed their target by anywhere from 1 to 3 million pounds per product. And if you're talking about both products combined, you're talking about anywhere from 2 to 6 million pounds of cheese sales that we're missing per week for a month. So lackluster sales volume at this new level. However, at this point, prices at the CME seem pretty comfortable. And further testament to that is that if you look out on the futures forward curve, prices maintain at this level through the course of all of next year. Up next is whey, 2761. That represents a +1 to the CME 1 week average of 2645. We traded 8 loads on the CME last week. Volume here on the NDPSR slipping a little bit. Still above our expected 4.5 million pounds, but well short of the neighborhood that we have been living at volume-wise for the last several weeks. All in all, I'd have to call 4.8 million pounds moved at, call it a 50-cent premium to the August 19th number of 26.97. A pretty good week. The manufacturer was able to move product at a premium and sell a little bit more than our expected 4.5 million contracted volume level. And then lastly, non-fat, 110.66. That's call it a half a cent premium to the CME 1 week average of 109.80. Our typical non-fat basis is 2 over, so we fell a little bit short of that. However, positive basis in non-fat is a victory. We traded 14 loads on the CME last week. Volume in non-fat also struggling to reach the benchmark contracted sales volume of 20 million pounds, coming in a solid 3 million pounds short of that. So this is week 1 of 5 for the September pricing period, currently getting a September class 3 of 1840 and a September class 4 of 1873. If you carry current CME equivalents out through the remainder of the 4-week October pricing cycle, currently getting an October class 3 of 1850, and again, October class 4 up at 1870. So we'll see what they have in store for us in the weeks to come at the CME. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. See you next week. Bye.